Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to give you an update on the portfolio, but we're going to talk about why I don't buy ETFs and maybe why it's not for everybody. And that is just my opinion. It's not to bash anyone's style of investing, but I'm just going to give you my take on why I don't invest in ETFs. And so, yeah, we'll just get right into it. But if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. And so we'll get right into it. We'll give you an update here on the portfolio. So this is kind of off because I forgot to deposit $100 on Sunday. So I did it yesterday, and we're still running into the issue trying to figure out when is a good day for it to correct itself. So these numbers are a bit off, because I did put in the money yesterday. So here's the proof right here. So we'll just get right into it. As always, it's $100 a week. So portfolio closed out today at $3,629.77. You know what? We'll actually just skip this part and we'll just go right into the position. So because the numbers are just off, everything's down almost $100 for the most part. If it loads here, there it is. So yeah, we'll just get right into it. This is not an actual loss. It's correcting itself because yesterday it added $100 to the performance, which is not correct. And so we'll just get right into the position so we have enough time to talk about ETFs. So first position is BCE, which is Bell Canada. Ticker symbol is BCE. Closing out at $55.81, down 9 cents on the day, down 0.16%. We own 8 shares of this. Total position value of $446.48. Our average price of getting in is $56.41, and it holds about 12.74% of the portfolio. It is down 72 cents today. And our total return since owning the position is $4.78, down 1.06%, and that is Bell Canada. Next position we have is Bank of Montreal, ticker symbol BMO, closing out at $109.60, down 12 cents on the day, down 0.11%. We own 5 shares of this. Total position value of $548 even. Our average price of getting in is $81.32, and it holds about 15.64% of the portfolio. We are down 60 cents today, but our total return since owning the position is up $141.40, up 34.78%. Next position we own is Bank of Nova Scotia, ticker symbol BNS, closing out at $78.92, up 16 cents on the day, up 0.2%. We own 7 shares of this. Total position value of $552.44. Our average price of getting in is $54.58, and it holds about 15.76% of the portfolio. Today's return was up $1.12. And our total return since owning the position is $170.39, up 44.6%. Next position we own is Loblaws, ticker symbol L, closing out at $67.42, up $1.26 today, up 1.9%. We own 6 shares of this. Total position value of $404.52. Our average price of getting in is $63.27, and it holds about 11.54% of the portfolio. Today's return is $7.56, and our total return since owning the position is $24.89, up 6.56%. And again, that is Loblaws. Next position we own is Manulife Financial Corporation, closing out at $26.71, down 17 cents on the day, down 0.63%. We own 17 shares of this. Total position value of $454.07. Our average price of getting in is $19.26. It holds about 12.96% of the portfolio. Today's return is down $2.89, but our total return since owning the position is $126.63, up 38.67%. And again, that is Manulife Financial Corporation. Next position we own is Royal Bank of Canada, closing out at $115.99. We are up 7 cents on the day, up 0.06%. We own 4 shares of this. Total position value of $463.83. $104.96. Our average price of getting in is $106.74, and it holds about 13.24% of the portfolio. Today's return was up 28 cents on the day. And our total return since owning the position is $36.99, up 8.66%. Next position we own is TELUS Corporation, ticker symbol T, closing the day out at $25.92, down 30 cents on the day, down 1.14%. We own 15 shares of this, total position value of $388.80. Our average price of getting in is $26.25, and it holds about 11.09% of the portfolio, down $4.50. And our total return since owning the position is down $4.94, down 1.25%. And again, that is TELUS. Next position we own is TD, closing out at $82.15. We are up 9 cents on the day, up 0.11% there. We own 3 shares of this. Total position value of $246.45. Our average price of getting in is $71.94. And it holds about 7.03% of the portfolio. Today's return is up 27 cents, and our total return since owning the position is $30.62, up 14.19%. Again, that is Toronto Dominion Bank, ticker symbol TD. So we have $125.05 in cash that will be deployed on Friday into this position here, which is Toronto Dominion Bank, just to give you the heads up. But we will head back to this one. We'll go to the all, just so that you can see the graph there. And so we're going to talk about ETFs. What are ETFs? ETFs stand for exchange traded funds. And what is an ETF? An ETF is very similar to a mutual fund. So if you know what a mutual fund is, very, very similar, except you can trade ETFs on the stock market at whatever price it's at. And I got a comment in, I'm not going to point it out, but I got a comment stating, why don't I have ETFs as a solid foundation? And I'm not bashing anyone's investing style or anything like that. Again, I'm not a financial advisor. I'm definitely not your financial advisor. This is just my opinion, and usually for entertainment purposes only. But the reason I don't buy ETFs, and I'm going to give positives and negatives to ETFs, is that I do believe I have the due diligence in myself and the trust in myself to do the research in companies, to invest in the company itself. And that's not saying that you're not investing in the company if you're buying an ETF. An ETF is literally just a list of companies, with whether it's in a sector, like financial sector, or a technology sector, or an industry sector, whatever it is, banking, they typically try to index a certain industry or a certain type of company, or that industry. But that's what I'm getting at. So ETFs hold a lot of different companies within it, and you buy it with other people. Your money typically gets pooled together, just like a mutual fund. It has fees to it, as in management fees, and sometimes they do pay dividends, sometimes they don't. They sometimes take those dividends and reinvest it into the ETF to increase certain positions. But that is what is the kind of negative for me, is I trust myself enough to invest in companies. So the perfect example that I want to kind of go through is like ARK. ARK has had a great success this past year with their ETFs, whether it was in their ARK F, which is, I believe, is their financial section for fintech, so financial tech, and then innovations, which is like your Teslas and things like that. You can go look at the whole list that they have for the ETF, what's in there. And so, is it a solid foundation? Yes. If you are a passive investor, for the most part, and you don't want to do your research in the company, I think it is a good investment for those that maybe just want a lot of diversification. And I'm not too big on diversification. If you can imagine, if you had a mall with like 200 stores in it, that is an ETF to me. It's literally a mall with 200 stores in it, and you don't get to pick whether you invest in that one store that is not succeeding. You kind of get the whole bunch. And that is kind of the downside for me is I'm the type of investor that likes to look into specific companies and invest in that company if I believe in it. I'm not one to invest in a company I've never heard of or even like. For example, like I have in this portfolio, you can see Bell Canada, which is BCE, and TELUS. And one of the major players in Canada is Rogers. And as you can see, I don't have a position in Rogers, and there's a reason for that. It's just I just have, I guess, my biases against Rogers. So I don't believe in the company. So I'm not going to invest my money into Rogers. I truly look at my portfolio as these are companies I believe in, and these are companies I'd like to invest in, as you can see on my watch list. But the other thing is, like, when you go through a list on an ETF, there are a lot of companies on there that maybe you've never heard of. And so what if I don't like that position? What if I do buy an ETF, but I don't like the company, one of the companies that are in there? There's no way I can get that removed from that ETF. And so it's just not for me. And I know a lot of people think it's like a solid foundation, but what dictates a solid foundation when you're investing? And I don't think anything really does. I think when you're investing, you are taking risk levels, and you can hedge your risk by putting a lot of diversification. Let's say an industry or a sector doesn't do well in the marketplace, and then another sector does. It kind of balances itself out. But I'd rather pick 10 to 20 stocks that I truly believe in out of maybe the 200 that are in an ETF and take my chances, because I think I do my due diligence. I do enough due diligence to know what companies I'm going to invest in and what companies I'm not going to invest in. And I can do my due diligence enough where I can hedge my risk by doing that research, by actually looking into the company, knowing what the company's doing. It just gets me more involved, right? And so that's why I don't have ETFs. Nothing against them. The closest thing to an ETF that I have, and it's not in this portfolio because this is a dividend portfolio that I'm showing people how to build. Of course, it's just for fun and in my opinion only. But the only similar thing that I invest in that is close to an ETF is indexes, and that is the S&P and the NASDAQ. Those are the only two that I typically leave as passive. But for the most part, when I invest in general, I'm looking into specific companies because I want to take that bet. I want to take that chance on that company. It's like when you go into, I think it's ARK Innovations, that ETF, you have Tesla in there, you have Square in there, you have, I think, Twitter's in there too, on the list of companies that they invest in. But you don't get to have a say whether you increase the position on Tesla or you increase the position on Apple or Twitter. I don't have Twitter stock, and I don't want Twitter stock, to be honest. I do believe it is in there. I'd rather take my chips and put it on Tesla and Square, to be honest with you, and forget about the rest that are in there. And so that is part of one of the reasons why I don't have ETFs, because I trust myself enough to invest in the company itself. But it's also a liquidity thing. Let's say a company underperforms, and I don't want that position anymore. And let's say I've been in the position for a long time and I want to get out of that position. I can get out of that position by just selling that one company, that position in that company, and still keep the company that I want. Whereas if you maybe don't want an ETF, you have to get out of the whole thing. That means you don't get to keep the Tesla or the whole list of companies in there. And so it really limits you on what you can do. And there's management fees. We live in a world now in an industry where trading is almost free, and ETFs still have management fees, just like a mutual fund does. The rate of return on an ETF for me is just not attractive. And so I'm not bashing people who have ETFs, like each to their own. You have your own investing style, but that's my take on it. And so when people leave comments on why I don't have ETFs, they can refer back to this video and really understand why I have specific stocks and not ETFs. I don't want to manage 100 different companies and think that if an industry underperforms and the other industry performs, that, you know, I hedge my position. I'd rather have massive gains in one company, and if another company is underperforming, but because I believe in that company, I'm not going to invest in a company I don't believe in. If I believe in it and the company's underperforming, I'm going in. The stock is on sale. I'm going in, and I'm going to average my cost down, and that's just how it is. And so that is typically the reason why I don't buy ETFs. I know they're very popular today, but I take into factor a lot of the management fees, which is like an MER fee, the management fee. The person that are building these portfolios, they could literally get fired in a second, and I don't like that. Also, there are literally hundreds, maybe thousands of ETFs out there, and these funds can literally close tomorrow. And then you get paid out in cash, and I don't want that. I want stable companies that I hold positions in, that if something comes up, I know that they'll probably just turn around. Where a fund, let's say ARK or whatever ARK it is, or Vanguard fund or whatever it is, decides to close that fund, you don't get the choice in the matter. They will literally pay you out the cash value of that fund and pay it back to you. And so that's why I'm just not for it. I see a lot more cons to it than pros for someone like myself. But maybe for someone who's a new investor who wants the diversification, who maybe doesn't know where to start, an ETF is a great place to start for you. Because then you start learning about these companies that these big funds are investing in. And the pro side of, I guess, ETFs is that some ETFs actually invest internationally into stocks that we can't purchase in North America. For example, I think there's like Chinese ETFs or ETFs that invest in China, into companies that your regular investor can invest in. And so, you know, that is an avenue you can take to invest in that sector of the world, in those markets. But other than that, I'm not one to get ETFs. If I'm gonna purchase anything close to an ETF, it's gonna be an index, and it's gonna be in the S&P or the Nasdaq, because those ones typically perform. You know, on average, the Nasdaq is like a 20% return per year over the 10-year average, and then the S&P is about a 15% return per year on average. But you know, if you take a look at a lot of big investors, for example, Warren Buffett. Warren Buffett doesn't own ETFs. I've never seen him talk about ETFs or highly. He recommends them for your new investor, or, you know, someone who doesn't want to do the research and has more a passive approach to ETFs. And I might get a lot of flack for this video, but it is what it is. But I don't think Warren Buffett, other than his wife owning an ETF in government bonds, that's the only ETF he might own, you know. And then, you know, I don't think Mark Cuban has ETFs either, and that's a big investor as well. I'm just throwing names out there just to give you an idea. Kevin O'Leary, he doesn't have ETFs. He owns a company that creates these funds, you know, to help your average investor, you know, start to get in the market. But I'm not one to get ETFs. So if you have ETFs, no judgment. But I do get the question a lot on why I don't invest in ETFs, and they have become a very popular route outside of mutual funds, but they are a very close relative of mutual funds. And mutual funds just, for me, just don't perform very well. They're the same. They have the same kind of style in the way they do things. And so, you know, that is the reason why. I know I'm not going to put bullet points in this and things like that, but I just want to get that video out just to let people know the reason why I don't have ETFs and why I have so many. You know, someone asked me why I have so many bank stocks. Well, I believe in the Canadian banking system. I believe in the financial sector in Canada. Typically, their profits keep rising. They raise dividends. They have a strong record of paying dividends out, and that's why we have this channel, is to build a dividend portfolio in front of people's eyes, to show you how easy it is to start investing. And the returns are typically much higher than an ETF when it comes to dividends. You know, you look at some dividend ETFs. I don't know, because I don't invest ETFs, so I can't speak too intelligently on it. I just give you the general idea. But yeah, I won't even get into it. But those are my reasons why. I know this video might be all over the place, but hopefully you guys did get something out of it. Hopefully you guys did enjoy the video. I know we got an issue with trying to fix the percentages on Wealthsimple Trade, but yeah, so that is my reason. So that is why I don't have ETFs. The closest thing I have to an ETF are indexes, which are the S&P 500 and the NASDAQ. And so hopefully you guys did enjoy the video. Have a great week, and we'll see you on Friday when we update our position and update the spreadsheet for you guys. And we'll see you in the next one. Bye.